Katy Perry there. I'm Morning Dave. We're at 8:40 now. And somebody is always here to check in on finances at this time each morning. I'm glad I am today, and I'm also glad that Phillip Statler is, because I haven't had a chance to argue with Phillip now in almost a week, and I've really missed you, Phillip. It's good to hear you.
Hey, man, I have missed you as well. It's, one of the things I learned about radio is when you're by yourself, you got to talk an awful lot. And I'm glad you're back in the seat over there.
Well, I've missed our daily chats, and I appreciate you putting up with that light case of COVID that I had to do earlier this week. First thing I said when we got on the phone before we went on the air was, well, that was a nice soft landing recession. As of yesterday, we're officially out of a recession. That should be really good news, shouldn't it?
Yeah. I'm doubtful. Doubtful is the word I have for right now. Yes, it was a good quarter last time, but we're not through this deal yet. The Fed's not done doing their thing, and so I think there's still some possibility. Nobody knows for sure, but there's definitely some possibility that we may slide back into that negative GDP number before this thing's all done.
My first reaction to that statement is, you think? It was kind of a surprise to me anyway to see a 2.5% increase in the gross domestic product on that first reading yesterday, because I honest to God thought everybody was being way optimistic to expect us to grow. And when it did, I was thinking, oh, Lord, now we're going to have every politician in Washington say, see, we fixed it. It's all over. Happy days are here again. Gratefully, at the very least, nobody went off the deep end with that yesterday that I heard anyway.
No, they really didn't. But, the economists that Market Watch and them follow expected GDP to rise by 2.3%, and the first reading is 2.6. So the expectation was for it to turn around and start to grow up. And so maybe that's what the numbers are saying. But and maybe it's because we're getting ready to go into the holiday season. Who really knows?
Maybe it could be the fact that we're going into the midterm elections. I trust government data about as far as I can throw it.
There you go. Maybe they're just trying to bump it up and get everybody excited about leaving things the way they are. I don't think so.
Well, hey, zero inflation. We heard that a while ago, so what the heck? We got a bunch of government data dumps speaking about inflation this morning, and the favorite inflation measurement that Jay Paulson from the Federal Reserve uses is the PCE, the Personal Consumption Expenditure inflation rate. And year over year in September, we came in with a 6.2% PCE inflation rate. That actually was a little bit better than they were expecting. The core also a little bit better than they were expecting. Once you get the volatile things like food and energy out, it was 5.1%. Again, they were expecting 5.2%. I'm calling that good news, but boy, is it modest good news, right?
Well, that's right. I mean, we're seeing inflation maybe slowed down a little bit, but it's still going up, right? And maybe not as fast as it was. And we'll continue to see how that impacts the Fed. I mean, we already know we got 3 quarters coming. Was it next week or the week after? So, but these things are finally starting to impact us, and we still got 2 rate hikes up there somewhere 6 months ago or less that we still don't feel the effects of yet.
While I was sitting in my lazy boy with absolutely no ability to do anything else, I had a lot of time to peruse through all the columnists and everything on my iPad. And one of them was saying that according to what he's understanding from the Fed, they're just going to continue raising rates until the inflation rate is in the 2% range. We got a long way to go before that happens. And if they keep whacking us with a 2x4 until we get the number that they want, they're going to have 6 months worth of ill effects after that to cope with. I still have very little faith in the Federal Reserve.
They won't be able to fix that fast enough once that happens. And definitely, let's face it, that will drive us back into the recessionary numbers, because, I mean, inflation that high, folks are going to get laid off. And that's going to be, I think that's really what they're looking for. They want more people laid off, and it's coming. Maybe our friend Elon Musk will start that process up there at Twitter.
He did. At midnight last night, he fired 3 top executives all at once. Kind of leads us into the tidbits. There is a new head twit, and I'm not talking about a politician. Elon Musk actually closed on the deal with Twitter last night, promptly canned the CEO, the CFO, and the whatever the position was called that was actually the person that told us that we were misbehaving on Twitter. They're all gone. Elon now has business cards to call himself the head twit, which I actually kind of get a kick out of, don't you?
Yeah, I do. It might be a fitting term for him.
At the very least, in the mind of the people that don't like him much, they probably agree wholeheartedly with that. Now, I didn't notice that. You're on Twitter. I am. I don't post a lot, but I do follow things. I didn't see any change on mine. I still had a whole bunch of robotic posts from all of the news organizations out. I didn't see any change whatsoever in my feed this morning. Did you?
You know, I don't get on there on a regular basis. I know I'm on there, but I don't look at it very often. But I think that most likely, you know, if it happened at midnight last night, changes will come over time.
It'll be interesting to watch. I didn't really expect any changes, but I kind of expected to see a couple of interesting tweets from Musk. And since he brought that sink into the lobby the other day, which I got kind of a bang out of, that was about the only thing that's happened so far. So it's going to be interesting to watch. I think we're at about the same mold. We aren't terribly active on Twitter, but follow it. And I check in every couple of days to see what's going on. And by and large, I've always found the platform boring, so I end up going back to Facebook. The other thing out this morning is Amazon put out a projection for their holiday sales. They said it was going to be slower than expected, and Lordy gosh almighty, the market's unimpressed by that, aren't they?
Yeah, they really are. I mean, they came out and projected a weaker than expected revenue for the current quarter. You know, they're giving some projections on what they think the economy is going to do. A lot of uncertainty out there heading into the holiday season, and that again, they're one of the corporations that's really talking about the strong dollar and how that's affecting them as well. And they are getting creamed this morning, down almost 14%. Yeah,
and the price of their stock, that's a ton of bucks.
Well, yeah, I mean, you got to remember now they got split down, so they're $100. They closed yesterday 110.
Only 100, okay. That's right. So, they were like a $500 stock for a while, I know.
Oh, they were like $1,000 stock. I think they did a 20 for 1. And
okay.
I think that's what they did. And so they're down right now at $95.41 a share. Below their 52-week low.
Ooh, Jeff Bezos might have to go to biofuels the next time he sends a rocket up or something. After a pretty decent day yesterday, that report just kind of leads a bunch of stuff. What have we got in terms of quarterly reports out this morning?
So in quarterly reports, we've got some, household names that are really playing it big. The oil industry, we had Exxon and Chevron both report, both of them trading higher this morning. They had Exxon had record profits, exceeded the analyst expectations. They got help because of higher natural gas prices, and they've been able to control cost a little bit too, as crude slid a little bit and didn't help them as much, but they're up 2% this morning. And then Chevron, same thing. They beat across the board. Their profits, $11.2 billion profit, was a little lower than their record profit, but not by much at all. And so it was the second best quarter they had on record. And they're trading up almost 2% this morning as well.
Crud. That's a good start for things. Any other household names we've heard of?
We do. So let's change to the maybe the kind of the tech sector a little bit here. We had Apple actually reported.
They did?
Yeah, they did. They beat on top and bottom lines. And it's the highest revenue ever for that July through September quarter that they had. A few flies in the ointment. iPhone sales during the quarter were slightly below what Wall Street had forecasted. But still not hurting them this morning. Well, maybe it's hurting them a little bit. They're not in the red, but they were up about 1.5% earlier this morning. Now they're just up about 0.1%. So not a big jump for them. The other
That
Go
quarter
ahead.
that ends in September for Apple is generally an off quarter for them because it leads into the new cycle for their iPhones. I would think a record quarter for that particular one would really give them a buoyancy.
You would think, but I
Yeah.
guess iPhones just didn't do what they thought they would do. The other company that tech company we had report was Intel, and Intel they cut their full year forecast. Obviously, they beat on their top and bottom line for this last quarter, but for the full year forecast, they kind of are cutting away and focusing on some cost reduction over this next year. They're trading up 6.3%, a nice little bump for them this morning. The last one I have for you goes to kind of, I guess you call it social media, kind of Pinterest. Pinterest came out and they had a good quarter, man. They beat the expectations across the board. They monthly user numbers also topped expectations, which is a good thing for them. They were trading up as much as 9.6. Actually, they're up 10% right now.
Wow.
Yeah.
It's nice to hear one of the also brands do well. Resetting the table, modest up day yesterday on Wall Street. Actually, a pretty darn good one. The Nasdaq ended up up, or the Nasdaq was down, the S&P was down, but the Dow was up 194 points. Now that I actually focus on the screen,
I say, what were you looking at, Dave? I was concerned about what you was looking at. Yours matching my screen. See?
Yeah, I was actually looking at the futures where I've actually got some green ink on the top line on a couple of the indexes, which I like. Then I scrolled forward and said, "Oops." I'll just put it on the COVID drugs and blame it on that. So, how are we doing 45 minutes before we open this morning anyway?
Well, Dave, we have flipped to all red right now. I don't have a green thing on my screen except for the VIX. The Dow 30 is basically flat. Right now it's down $3.50, so nothing. The S&P 500 is down 0.5%. The NASDAQ 100 is down 1%. So, it's going to be one of those opens today. And on the commodity side, we've seen silver retreat even more, down 1.6%. Gold down almost 1.2%. Crude oil, thankfully, is heading down this morning, Dave, because it's been ratcheting up while you've been gone. Down 1.3% to $87.91. We were getting awful close to 90 before you got back.
Woo! See, I come back and everything turns up roses. Overseas markets, the Asian room was off precipitously at the close yesterday. Hong Kong at 6 a.m. this morning was down by 3.5+%. Mainland Chinese markets over 2%. Europe is looking at our economic data and saying, "Oh Lord, get ready for another whack with a 2x4." They're off marginally halfway through their day. Keeping tabs on what you got is important, but if you obsess about it, you're in trouble. Having a plan is where it counts for retirement. How do I find you to get that plan?
Then give us a call at 863-382-0037 to walk through our core retirement design, where we help you design the retirement you always dreamed of. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730. 95.3 FM.
And the Gator game is going to push us a little bit earlier this time. We're going to do 11:30 on Saturday, if that's okay with you.
Sounds good, man, as long as we get her in.
It'll get in there, and it'll be there on time, 11:30 on Saturday morning, right before the Gator-Georgia game, which a whole lot of us are worried about the output of as well. If the Bucks can't win, can the Gators do anything with Georgia? You have a great weekend, my friend. I'll see you Monday.
All right, buddy. You too.
Thanks. It's 105.7 Light FM and Statler Financial Services. Phillip Statler.
Hey, folks. Again, I want to thank you for joining us today. It is Friday. It is the last Friday of October. Next week, we'll head into November, the kind of the middle month of the quarter. And hopefully we'll have some good news start to flow in from the economic front. We know pretty much we'll have interest rates rising, meaning that the volatility and the risk are going to continue to be something we have to deal with for the rest of this year and probably a good part of next year. So that's why we developed the core retirement design to help you level out that portfolio. Give us a call at 863-382-0037 to schedule your core retirement design. With that, have a great day.